ultimately, Bitcoin, I think, will go to another speculative blow off. And normally that blow off has been about 2 times fair value. So in 18, we got to 20 on a fair value of 10. In 21, we got to 60 on a fair value of 30. And this time, I don't think we do double. Why? The reason I don't think it does twice this time is there's not as much leverage. Most of the leverage has been dissipated because the SEC sued all the big leverage providers and made it really difficult for people to get 100x. Now, you should never buy an 80 vol asset with 100x leverage.
According to Mark Yusko, CEO, founder, and chief investment officer of Morgan Creek Capital Management, 2 key events in the Bitcoin market could potentially drive prices up to $150,000 by the middle of next year. Yusko believes that the approval of a spot Bitcoin ETF and the upcoming Bitcoin halving in April 2023 will trigger a new rally and significantly increase the fair value of Bitcoin. Yusko explains that he currently believes the fair value of Bitcoin is $55,000, but it will double after the approval of the spot Bitcoin ETF and the 4th halving. The halving event will reduce block rewards for miners from 6.25 Bitcoin to 3.125 Bitcoin per block. Yusko further states that by the middle of summer next year, $100,000 will be considered fair value, the potential to reach $150,000 due to speculation. Yusko also discusses the possibility of a spot Bitcoin ETF getting approved by the U.S. Securities and Exchange Commission. He suggests that the BlackRock spot Bitcoin ETF is likely to be the first to receive approval, citing connections and relationships as key factors. Let us now get into the video as Mark Yusko discusses the price prediction of Bitcoin and why BlackRock approval will be very monumental for Bitcoin. As you watch, don't forget to like, subscribe, and drop your comments below.
We blow right through that 150 and things get really crazy because we saw that, right? We don't have to hypothesize, Scott. We know exactly what happens when you put $20 billion of demand into the Bitcoin ecosystem. 4 years ago, we saw that. We went from 10 to 60 in about 6 months. Why? Because GBTC. Everyone forgets. We've seen this movie before. It wasn't as pure. An ETF is more pure. The money goes right in. With GBTC, a qualified purchaser had to buy the shares in the private market, wait 12 months, and then feed them, feed the ducks into the public market. But that asset went to $20 billion from zero. And it didn't happen over 6 months, but that parabolic part did. And that was 20 billion. Now the market cap was smaller, so it was about roughly the same percentage. It's funny when you talk about this topic, people are like, hope is not an investment strategy. You're just hoping because, it's down so much. Like, no, I'm just doing the math. Because when prices were 70,000, you didn't see me on your show or anybody else's show saying, this is really cheap. You should really be loading the truck up at this price. Because it wasn't. Fair value was 30,000, 33,000. The market cap, the price had gotten to 70K. That was stupid. Well, why was that stupid? It was because of gambling. There was too much leverage in the system. And then everybody's like, well, it became a speculative asset. Like, no, it didn't. It was the same asset it always was. Uncorrelated stocks, uncorrelated bonds. No. The correlation went to 1. Like, yes, that's what happens in liquidations. When you get a stock market crash and people get a margin call because their Netflix stock went down 70% and their, Amazon stock went down 55%. Let that sink in for a second. One of the largest companies in the world went down 55%. And you get a margin call. You don't sell Amazon. You sell Bitcoin or gold or cash or bonds. And so all the things that are liquid went down faster. And so the correlations do go to 1 momentarily. Now the correlations actually went negative for the first time a couple weeks ago. But on average, Bitcoin is 0.15 correlated to stocks, 0.0 correlated to bonds, and it's going to stay that way. It's the perfect diversifying asset. Not only should you have the 1% just because you should probably have 2 or 3 or 4% because it's the best diversifying asset I've ever seen. And I've seen them all. I mean, I've been alive long enough to see when we used to have only bonds, years. What it is, again, it's back to that greed and fear. It's just pure greed. And buying something because someone else will pay you more for it is not an investment strategy. And you say, well, but Bitcoin has no utility. Like, no, Bitcoin is, I believe, digital gold. It is a scarce asset that has better liquidity and lighter weight. The Hal Finney quote, God rest his soul, is amazing, right? I can envision a day when banks might use Bitcoin the same way they use gold today and issue deposits on top of it because it has, great lighter weight and less friction. That's what it is. It's a technological evolution of an asset that has existed for 5,000 years. And it's extraordinary technology.
With the market looking for bullish catalysts, Yusko says that a Bitcoin ETF will be hugely positive for Bitcoin and the overall crypto space. Yusko points out that BlackRock, the biggest asset manager in the world, has virtually a 100% success rate of getting ETF approved and will likely continue its streak with its Bitcoin application. The Bitcoin bull says that the BlackRock ETF could unleash a $30 trillion market of institutional investors that would then have access to Bitcoin after previously being hesitant due to regulatory uncertainty. If the ETF can get 0.1% of those assets, Yusko says it would certainly move the needle on Bitcoin given its low free float or Bitcoin that are available for trading. Let us now get back into the video and listen to what Mark Yusko has to say about the ETF.
Buy it today. Buy it tomorrow, buy it next week, buy it next month, because it doesn't matter what price you pay. What matters is owning a piece of the greatest and most powerful computing platform the world has ever seen. That's what Bitcoin is. It is the most powerful computing network the world has ever seen. And it provides a function. It provides a better accounting system for the base layer of money than anything we've ever seen in history. And not to own that, I just think is imprudent. And what you pay for your share is kind of irrelevant because you're going to want to own this thing in perpetuity. So but I think it's really funny to watch her be just as skeptical at 29 as 4 or 5, wherever, 4.5 years ago when we were on together at 8. The number of 55K is absent the ETF, right? The fair value of 55K, which is what we'll march toward by the halving, right? We'll march toward fair value. Then fair value will change on the halving event, and that pushes it to 100. So 100 has nothing to do with the ETF. What the ETF has the potential to do, and I totally agree with Tom, it has the potential to really mess up the supply-demand dynamic because you're talking about a $550 billion asset, right? And so an ETF, when the ETF is approved, and I'll give it 50-50 chance on October 17th. So on October 16th, they will deny or push the Bitwise application the same way they pushed Kathy's application on Monday, right? And we're investors in both, right? We own a little piece of Amun and we own a little piece of Bitwise, and I wish both of them would get approved because the first one that gets approved gets everything. It's the victor takes the spoils. So I wish one of them would get approved, but it's not going to happen. BlackRock will get approved, and they're going to be first. So October 17th, they're third in line. Could they get approved on? Yeah, 50-50. More likely, they push them 90 days into 2024, and it gets approved either in January, or they might push it another 90 days and get it right around the halving. Those people don't care about how things look and optics. They're like, we are manipulating this process. We aren't going to do it the way it should be, which is whoever put in first should get it. We've decided the winner. We're the kingmaker, even though that's not their job actually. But let's talk about this. So you got a $550 billion asset. When the BlackRock ETF is approved, that basically opens up 30 trillion-ish. And this is from Eric Balkunas, who did the analysis, and I agree with him. 30 trillion of assets under advisors and RIAs that right now are prohibited from owning the asset. Like, I have a Family Harmony account at UBS. My brother-in-law's there, and I have some money with him. And I say, can I buy GBTC? No. UBS says no. Can I buy a mining company that does Bitcoin mining? No. So they don't let you do anything. Now, it's not as bad as I understood. Merrill actually wouldn't take you as a new account.
I heard the same, actually, anecdotally.
You made your money in crypto.
Yep.
It's like, are you kidding me? Anyway, so they'll take drug dealers and all kinds of other people, but they won't take Bitcoin. But pharmaceutical reps. Anyway, so 30 trillion, let's say you get 0.1%. Okay. That's not really aggressive. 0.1%. That's $30 billion. Well, Mark, 30 billion on 550 billion, that's not going to move the needle. Wait a minute. Remember, roughly 80 odd percent doesn't trade every day.
Yeah.
About 20% of the market cap. So let's call it 100 billion for round numbers. 100 billion trades every day. Okay, 30 on 100, that'll move the needle. But let's think about this. Is 0.1 reasonable? Like, if you're an RIA and you got clients clamoring to put, are you going to put 0.1 or are you going to put 1?
Bitcoin tumbled below the $26,000 level for the first time in almost 2 months, extending its downward trend for the week. Ether fared no better, plunging to $1,551, also near a 2-month low. Among the factors behind the selling is a continued surge in global interest rates, particularly in the U.S., where the 30-year Treasury bond rose to 4.42%, its highest level since 2011, according to Bloomberg. The 10-year yield at 4.32 has risen to just a basis point shy of about a 15-year high. That's helped put a damper on not just crypto prices, but risk assets in general. Though holding the flat line today, the Nasdaq is lower by about 6% for August. While Bitcoin bulls have pointed to what they hope will be the SEC's imminent approval of a spot Bitcoin ETF, there's no guarantee the SEC even decides in 2023 on any of the numerous applications in front of the agency, let alone give its approval. Another positive catalyst might be a favorable court decision for Grayscale, the owner of the Grayscale Bitcoin Trust, GBTC, in its lawsuit against the SEC to force approval of its attempt to convert that trust into an ETF. There had been some hope a ruling could come on Tuesday, but that day has passed and now watchers are eyeing Friday as a possibility. The downside volatility in Bitcoin also comes days after the U.S. Commodity and Futures Trading Commission's CFTC report on commitment of traders showed leveraged funds. Hedge funds and commodity trading advisors ramped up bearish bets in the CME-listed cash-settled Bitcoin futures in the week ended August 8. 2/3 of their positions are short, shown in red, versus 1/3 long, shown in blue. That's the widest it's been in since April 2022. Lawrence Lewin, director of content at crypto analytics firm The Tides, said in a weekly newsletter. Perhaps sophisticated traders are worried about potential spillovers from murky macro outlook and rising nominal and inflation-adjusted U.S. government bond yields. Besides, the crypto market has been indifferent to recent positive crypto-specific developments like the launch of a stable coin by PayPal, one of the largest financial services companies in the world, and a string of applications for futures-based exchange-traded funds, ETF, tied to Ether. What do you think Bitcoin's price will be after the ETF approval? Let us know in the comments section below. Also, don't forget to like, subscribe, and turn on notifications. Thanks for watching.